Donald Trump's election as President of the United States has sent shockwaves throughout the world and shockwaves throughout world markets. Traders have been looking over the last 2 days to try and figure out who some of the winners and who some of the losers are from potential changes in policy from an incoming Trump administration. What's really interesting is that we're seeing quite a bit of a shift in the markets and how the markets are looking at Brexit, how they're looking at the UK relative to the EU. And this is important because a lot of the people that came out to support Donald Trump are very similar to the people that came out and supported Brexit, people who felt they'd been left behind by globalization, people who are angry and upset with their elites and who want to take their country back. Very similar sentiments on both sides of the Atlantic that are starting to play out. But back in June, though, initially people looked at it and thought that the UK might be isolated. Now the UK looks like it's less isolated and more at the cutting edge and the cusp of a major swing in the political pendulum into a new direction. That these sorts of things happen once a generation, and things do go back and forth in stages. But this is looks like it could be the beginning of a new trend here in politics around the world, and so it's quite interesting because now the people behind Brexit have potential allies, or at least like-minded people coming in to take over the government in the United States starting in January, and just in time for Article 50 to be triggered in March. So this is quite significant. And where are we seeing this play out? Big time in the currency markets. We're seeing the pound starting to really outperform, especially relative to the euro. I think there's a feeling now out there that the US and the UK could leave the EU in their dust as time goes on and these the new policies start to come in. And so where we're seeing this here, we're seeing a nice recovery in the pound, even against the U.S. dollar, but pretty consistently against everything. Since the beginning of November, the pound is really, after base building through October and stabilizing, the pound is really starting to pick up here in November. This is against the U.S. dollar, and look over here against the yen. Same sort of thing. Stabilized in October, starting to rally into November. A recovery seems to be underway for the pound. People aren't quite so fearful about Brexit all of a sudden with as I said, with a like-minded government coming into the United States and taking over the United States. And look here, euro against the pound, the cross-channel trade here. We had seen an explosive rally for the euro against the pound as the pound was absolutely crushed. But look at this now. In the last month or so, it's rolled over, and since the election, it's really broken out and started to accelerate to the downside. Look at this here. We've seen it take out this 23% retracement level, take out the 50-day moving average, take out the 38% retracement level here around 86.60, and continuing to accelerate down to the downside. This is 85. This here is about 84.60 and 50% retracement of this big massive uptrend from here. So overall, it does look like sentiment, which had been over the summer had been swinging in favor of Europe relative to Great Britain. Now it's going back the other way with sentiment favoring Great Britain over Europe. And we'll also show this here in down here. I wanted to mention euro dollar as well. Talk about in general, not only is sentiment improving towards Britain, but it's turning against Europe. Look at this. There was a big spike here up to 113 for euro dollar. It's now plunged below 109 down to 108.40. This is a 4.5 cent reversal. This is massive reversal in a currency in the matter of a few days. So this is a real turning of sentiment against Europe. And the one thing I did want to note also, though, is we are seeing this play out in the stock market the reverse way, whereas the FTSE has outperformed continental indices since the Brexit vote. Now it is starting to roll back and come back into line. It's pretty much even on performance over the last 8 months or so with the DAX. So we could see, though, and that's a function of the recovery in the currency. The FTSE benefited from the massive devaluation in the pound, so if the recovery in the pound does provide a headwind to UK stocks. But still, not only are people thinking that relative to the UK, now that Europe isn't looking as attractive, but on top of, and also because it still seems to be marching in one direction, whereas the direction of the parade is starting to be changed, so they may be left behind. And now the issue is that Europe could start to find itself facing more political volatility as well. There's a number of major votes and a number of this year and heading all through 2017 combination with major elections that could signal the potential for a political trend in Europe as well. It all starts with Italy's referendum being held on December the 4th. Then we move into, it's a question of whether Italian voters are it's really being seen as a referendum on the EU and on the direction of the EU. And if Eurosceptics have been doing really well in Italy, taking over mayors of some major cities, including Rome, and so do we see this trend continuing? A Eurosceptic, similar, more aligned with the Brexit and Trump supporters here. And then we go into 2017. We have elections in France with the Trump win putting wind behind the back of Marine Le Pen and her Eurosceptic party. We also have elections in Germany later in the year, elections in the Netherlands. There's a lot of big things happening in Europe in 2017 that we could end up seeing some significant political adjustments there as well. So we're heading into a more volatile time for Europe, and so because of that, we does look like as though we are seeing a significant change in trends in the markets here.